Hello and welcome back to Investing for Generations, your channel for high quality stock research for value investors. Today I want to take a short look on the Q3 earnings of Wells Fargo. It's a part of my portfolio, and so I will take a look at the Q3 earnings and will tell you then what I will do with my position. And therefore I want to go with you through an article of the Motley Fool, which is called Wells Fargo's Earnings Pressured by Low Interest Rates. Wells Fargo earned $2 billion or 42 cents per share in the 3 months ended September 30th. That was less than half of its 4.6 billion profit in the same period last year. Tough, it was up substantially from the second quarter of this year when the bank reported a 2.4 billion net loss. Like all banks, Wells Fargo results were impacted by low interest rates. In March, the Federal Reserve dropped the federal funds rate to 0%. That lowers funding costs for banks, as all depositors can appreciate, but it also drives down the interest rates on loans. The net result is that banks are generating less net interest income from their portfolios of earnings assets. Higher income from Wells Fargo's mortgage operation was one upside to lower interest rates. Despite the ongoing pandemic, home sales and refinancing activity continue at a brisk pace. Mortgage banking income at Wells Fargo in the third quarter was 1.6 billion, up from 317 billion in second quarter of this year. The operating environment for banks will continue to be challenging, as the Fed has said it will keep short-term interest rates at or near zero through at least 2023. In Wells Fargo's case, its shares are trading for 37% discount to book value compared to an average discount of 5% on the KBW Bank Index. For long-term investors, that's hard to ignore. And that's totally right. Wells Fargo seems much undervalued with a price-book ratio of 0.53. But with all the scandals and all the negativity in the past and the broken trust, which is existential in banking, the question becomes, is it really undervalued or is this a classical value trap? So I'm not that sure about this, but here, as we look at the price-book ratio, it really seems like Wells Fargo is well undervalued and it could be a great chance to buy in now. The price-book value is low as it was last time in the depth of the financial crisis. And the market yesterday, with these numbers published for the Q3, just sell off. Wells Fargo loses over 6% and is trading now at $23.25. And as we can see here on the 5-year chart, this is really a disaster, coming from prices around $60 now to $23. Hopefully they can cut the corner and turn around. This is my hope too, of course, as a shareholder, even if I'm not down so much, but I'm down also a bit, because I bought my shares of Wells Fargo with an average price of $31.74, and so I'm also down almost 25% right now. And so Wells Fargo became something like the black sheep of my portfolio family, but as we all should do with the black sheeps in our families, I will just keep it and I will keep calm, and of course I will not add more to my position, because also I'm not 100% sure they really can turn around, and so I just stick with my position and hope for the best. And then just a weekly update on my portfolio, and let's take a look what happened here in the last week. And not really much happened. I didn't sold something, I didn't bought something, there was no dividend come in, so my portfolio just sticks the same for the last week. And here you just can see my pie with all the companies I own. And if you are new to my channel, you will find a deeper analysis of every of these companies on my channel. The playlist to my portfolio is just here up on the corner, and if you find any value of this video or on the deeper analysis of all of these companies, Just make sure to subscribe to my channel and ring the notification bell to never miss another video. And join this group of long-term value investors. We get more all the time. We are now at over 400 people here in this community for really high value stock analysis and long-term investing. And last but not least, let's take a look how my portfolio performed so far. This portfolio started at the 2nd of December 2019, and since then my portfolio has a performance of 23.62%, which is nice, and is quite an outperformance to the S&P 500, which has in the same time span a performance of a little bit over 12%. And so I'm very happy about that. And when you look at the structure of my portfolio, you see there's not a lot of hype, not a lot of techies either. That's maybe an issue, maybe a problem. But I like my companies high profitable and to a fair price. And this is impossible right now with the tech stocks. And so I'm missing out here a little bit. But I'm very happy with my almost old economy portfolio and the performance of it. And this also shows me you don't have to jump on every hype to make a good return. That's the goal of this channel, to make a good return, a decent return over the long term. So thanks for watching. If you liked the video, please subscribe, tell all your friends about this community, and don't forget to give me a big thumbs up if you liked the video. This is really helpful for the YouTube algorithm and help my little channel so much. And then we will see you next time with another analysis of another stock. And see you then. Take care. Bye bye.